existed, and it was already a public company then. And then it just blew up. Everything blew, and you had the internet bubble. Today we have similarities with AI, and we have this incredible sense of optimism and excitement, and everything is going to be there now. How do you feel about this moment? And what do your instinct, taking us back 25 years ago, can help us detect? Because my instinct are of caution.
Mm-hmm. Well, okay, so to take you back in time, in the year 2000, when the internet bubble burst, Amazon's stock, in a very short period of time, went from $113 a share to $6 a share. And by the way, it's split many times since then. I don't know, 20 for 1 or maybe even more. I don't have the number. But so these prices have nothing to do with today's stock prices. But to go from 113 to 6 in a short period of time was very concerning. And shareholders were upset, employees were nervous. We had all of our employee base, their parents were all calling our employees and saying, "Are you okay?" You know, this was the environment of great nervousness. But I looked at the numbers in the business, and every month, as the stock price went from 113 to 6, a number of customers went up every month. Our gross profits went up every month. Our operating expense, we were still in a loss position, but our losses as a percentage of sales went down every month. Every single business metric, new customers, customer repeat purchases, everything that we were monitoring through that entire period kept getting better. And so that's one observation about bubbles in general. The fundamentals can be disconnected, the fundamentals of the business. And of course, as entrepreneurs, you're focused on the fundamentals of the business. The stock price is an output, an ultimate output that you actually have very little control over. Benjamin Graham, the great investor, is famous for saying, in the short term, the stock market is a voting machine. In the long term, it's a weighing machine. And so as founders and entrepreneurs and business people, our job is to build a heavy company. We want to build a company that when it is weighed, it is a very heavy company. We do not want to focus on the stock price. And so that is, that will be misleading because it can be disconnected from the fundamentals. And when bubbles happen, so that's one thing that happens. The second thing that happens when people get very excited, as they are today about artificial intelligence, for example, is every experiment gets funded. Every company gets funded. The good ideas and the bad ideas. And investors have a hard time in the middle of this excitement distinguishing between the good ideas and the bad ideas. And so that's also probably happening today. But it doesn't mean that anything that's happening isn't real. Like, AI is real, and it